Welcome back, Fox 5 News on the Hill. You know, President Trump been trying to push that tax reform plan that he's been talking about. He's going to do more of that next week as we head into another session of Congress.
Well, the latest jobs report is out. Let's take a look at this and see what we've got. It's doing well. It puts unemployment rate at an all-time low of 4.2%. But the recent hurricanes, they did have an impact on jobs. Now, the labor market shed 33,000 jobs last month. It's the first loss in nearly 7 years.
All right, talking about this right now this morning is economist Mark Avallone, our financial expert. Thanks for joining us today. We've heard differing things about this because we keep hearing differing things from the White House about what this is going to be. Let's talk to the middle-class person out there, right? We know the corporations tend to do okay on these things. Nobody's worried about them. We're worried about the middle class. Are people actually going to get a tax cut that's going to make a difference in their lives, in their pocketbooks, how they pay their bills every 2 weeks?
The answer is it depends, because the bill is in flux. Part of the deal is they're going to eliminate loopholes, which is state and local income tax deductions. That's a big one in this area, and that would raise middle-class taxes for a lot of people. But in exchange, what they're saying is they're going to raise your exemption. So they're going to tax you on less income, but they're going to take away some loopholes.
Can we talk about this promise that the president made that a lot of people, I think on both sides of the aisle, scoffed at a bit, this idea of getting a 3% growth? And Speaker Ryan this week, we can listen to a bit of what he had to say, but he did say that a tax plan like the one that we're seeing, though the details are still sparse, could get us to 3% growth. Let's listen to the speaker, and I'd like your thoughts on whether or not you think that's really possible.
Okay.
We know that if we get our tax code fixed, if we make America more competitive, we will have more jobs. We will keep the ones we've got, we will build more, but more importantly, we'll be more prosperous, we'll make more money, and there we can have higher wage growth, we can have higher living standards, we can be more productive.
So what's your take?
Well, there is some truth to that. If we lower corporate taxes in this country and make us more globally competitive, our companies will be able to compete better and hire more people. One thing that everyone's leaving out is that in the face of this, if we start getting more rapid economic growth, the Fed can raise rates more aggressively. And that can serve as a counter-cyclical weapon the Fed has to keep inflation and growth under check.
But there's a word that seems to be absent from this, and that word is deficit. We don't talk about the bills we have racked up and how the fact that we are still not paying down our debt and leaving this to another generation of American. Aren't we setting up the house of cards here for another fall down the line if we don't get our arms around this?
Well, the argument is if we have economic growth, the government will collect more taxes.
That's always the argument, though.
I know. And Republicans were very concerned about deficits when they were out of power. Now that they can pass tax cuts, they seem to be less concerned about deficits.
And if we can, just to go back to a point you made about the interest rate, though, I mean, the president did just come out and criticize the chair of the Federal Reserve for keeping the interest rates low. So, I mean, he has complimented that. Now he's criticizing it, saying they're artificially low. It's politically motivated. The Fed's not supposed to be politically motivated, but what did you think when you heard that?
Well, I'm not going to comment on lack of consistency from President Trump.
Okay.
But what happens with interest rates is they move against, when they raise interest rates, it moves against the economy. It will counteract what the tax cuts are going to try to do. So if we get 3% growth, I'm not sure we're going to get it because the Fed is in a rate hike program right now.
From a political standpoint, you look at what's going on with the Republicans right now. They've been stalled in their effort to get a big legislative win. About next month, they're looking at a year from their midterm elections. How critical is this for a political standpoint to get this tax cut and get this done soon?
And I think you just nailed it. This is going to come down to less tax reform, because that's too complicated, and tax cuts. And then they can say, we've got our voters something, and they're going to use that in the re-election next year.
Can we quickly talk about Puerto Rico and the fact that the president said they'd consider wiping out the debt? Can you quickly tell us how that would affect us here, or Americans in the mainland?
It's going to be very hard to do that. There's $73 billion in debt in an island of 4 million people. So if you forgive that debt, Chicago's going to want their debt forgiven. Providence, Rhode Island's having some trouble as well. All these jurisdictions that have accrued a lot of debt are going to say, hey, we need a bailout too. It's politically untenable to forgive $73 billion of debt.
All right, Mark Avallone, we appreciate you coming in and wrapping your arms around a whole host of issues this morning when it comes to finances.
Thank you for being with us today.
My pleasure.
All right, so obviously there's been a lot going on this week in terms of discussion about immigration, discussion about the president, his relationship, whether it's a good one or bad one, with Secretary of State Rex Tillerson.
Right, that's made a lot of headlines.
And the issue is whether or not we are seeing the beginning and the end of what could be Rex Tillerson as the Secretary of State, given the stories that have come out this week.